Bitcoin got the bounce we were looking for yesterday, breaking out of this very clear W pattern, but was rejected at the $40,000 level and is now holding support right around $36,500 US. Now, I think Bitcoin is headed much higher in the coming days to weeks, but there are some potential near-term bearish warning signs we need to pay attention to, the most important of which being the DXY, something we've talked about in just about every single video. We'll look at some potential reasons the DXY is gaining strength right now, and what I found is pretty interesting and point towards Bitcoin making a huge move in the near future. Now, taking advantage of this price action could easily 10x your Bitcoin bag, but it could just as easily get you wrecked. So make sure you stick around until the end of the episode because we're going to go over some price targets and potential entry points in today's video so you can avoid doing just that.
Yes, because so many people are in it and the frenzy is so great and the systems of management, the reward systems are so foolish that I don't think it's going to work at all. I think the returns will go down, yes. In real terms, the returns will be lower.
Where's it going?
I mean, can you play the clip in 2012 and 13 when it was at 200 and everybody was laughing at me on CNBC every time I would talk about Bitcoin?
If there is an escape, that escape will be used.
So maybe you could buy a little bit, you could try it out, you could see what happens.
We got some Bitfucks in there, I can tell.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everybody. Johnny here. Before we get going in today's episode, if you guys could hit that like and subscribe button, it definitely helps out the channel. And don't forget to ding that bell to stay up to date on all the latest and the greatest. All right, let's get right into this. So this is yesterday's trade idea that I posted in the group. We had our buy order sitting down here at this 236 extension or the 618 retracement from the all-time high over here right before Bitcoin took its nice little dump a few days ago. We did ride this up all the way to our target one at 39,415, and Bitcoin just passed that, getting rejected here at the $40,000 level. Now, what I think is going on right now, I think Bitcoin is getting ready to put in another W pattern before breaking this triangle to the upside. And I mean, the volume coming in is looking pretty strong, and it is looking very characteristic of that W pattern. So we do have our buy orders sitting down here, layered in all the way down to the 818 retracement here. And to get a target, we will just take a fib trend-based extension tool and say Bitcoin does come up here to this 382 retracement and then comes back all the way down to the 818. We're looking for a move at least up to 39,516, but if it goes beyond that, we're looking at least the 272 at 4706, which would put us across this overhead resistance, indicating we may be headed for much higher highs beyond there. Now, if Bitcoin is able to break across this overhead resistance, we're looking at a $52,624 target, which is about a 50% increase from where the price bottomed out early this morning. But if we do break to the bearish side, we could be looking at a $29,000 Bitcoin or even a $22,746 Bitcoin. Now, we definitely have to pay attention to this bearish scenario. And one of the reasons why is because of the DXY. So we have seen quite a relevant inverse correlation with the DXY and Bitcoin. Every time we get a pump to the upside out of the DXY, we get a move to the downside out of Bitcoin. So let's go ahead and take a look at the inverse correlation that I did talk about in just about every video up until now. Basically, this just says that for every 1% move to the downside we get out of the dollar, we get about a 10 to 15% move to the upside out of Bitcoin. And for every 1% move to the upside out of the dollar, we get about a 10 to 20% corrective move out of Bitcoin. All right, so if we take a look at the DXY on the daily chart, you can see it's in a falling wedge. This is a bullish reversal pattern, not to mention the lower time frame inverse head and shoulders that it is in right now. Now, the 1-to-1 extension of that lower time frame inverse head and shoulders does take price action up to this one here, right at 91% on the index, but just at this top trend line of this falling wedge, letting us know that we might just get a push up very quickly and then further continuation to the downside. Now, there are a lot of factors right now that are really influencing the strength of the dollar, and none of them are really looking promising, indicating we could be looking at much further downside out of the dollar, which would correspond to much further upside out of Bitcoin. Some interesting reasons for the dollar getting some strength this week are basically higher treasury yields. So this week's dollar move, it did coincide with a 20 basis point move in 10-year yields, yielding differentials in the dollar. It's favorable on a bunch of different fronts, and I think the move this week was on bond hedges, and I'm really curious to see how the dollar performs while these yields attempt to stabilize. But this is something to watch pretty closely, as this will affect the strength of the dollar moving forward, and it's really something that will ultimately affect Bitcoin as well. Now, the Federal Reserve, they have announced that they are not going to hike rates anytime soon, basically giving some people some confidence that rates are going to remain lower. The dollar will really go anywhere the Fed goes, and the Fed will follow inflation. Already the talk from central banks are changing. Less than a month ago, they were talking about more quantitative easing and lengthening the average maturity of purchases. And this week, they're talking about timelines for tapering bond purchases. They've been strident in forecasting no rate hikes into 2024, but that always comes with a caveat about inflation. They have been talking tough about allowing inflation to run hot and looking through temporary climbs, but when they're seeing 3% year-over-year inflation, are they going to hit the panic button? Their track record for consistency really is not inspiring. And this really builds, a pretty strong bearish case for the dollar heading into 2021 and likely beyond there. So we are getting this bounce. And, usually when you've had this strong of a drop for this long amount of time, a bounce is inevitable. It will come up and it will retest these moving averages. We have the 200 daily all the way up here at 93% on the index, and the 55. It did break across the 21 daily, and it is seemingly holding support here. But I think we're in for another bearish reversal here very, very soon. So this will be good for the Bitcoin, and this does add a bit of confluence to the bullish case here. We look at the CME chart. So the CME chart, we did have a bit of a gap here over the price action right now. The gap was right at $40,400. We did close the CME there. And then, Bitcoin headed lower into the weekend, leaving that gap above price action. So right now, we are looking for the quick retracement down here to the 618 all the way down to the 818 out of Bitcoin. And if this is indeed a W pattern, then we will see some continuation to the upside, likely taking us up all the way to $44,368. And if we are able to clear that target, we're looking at a $55,000 Bitcoin in the very near future. All right, guys, that's all I have for you today. Thanks so much for dropping in. Keep your eye on the DXY and keep buying Bitcoin. Don't sell to the whales. Peace.